So welcome everyone to this first episode of the NRA 2023 series of workshops that we're having to deep dive into the NRA and try to see how this applies to us, particularly to subject persons, whether they're financial institutions or whether they are the NFBPs. We're going to try and cover as much material as possible that is generic, that will be of interest to everybody. Ultimately, what we're going to do today in this first episode is examine what I do as a money laundering reporting officer or a compliance officer when this document lands on my lap. There are many things I can do when a document lands on my lap. I mean, a 212-page document, the obvious thing is I need to read it, but beyond that, so which parts are relevant to me, how do I deal with it, how do I interpret certain things, and it's easy to say, yes, just read the document and apply it, but when you do read the document from cover to cover, there are a number of questions that arise. The reality is certain things are not extremely straightforward. So what we're going to try to do is give some background information as to how to actually interpret some of the figures, some of the scores in the document, maybe highlight areas where the narrative is not clear and give our own interpretation. So that's the purpose of this first session. So what is definite is that we can't ignore this document, right? So as we said in the introduction, the National Risk Assessment is a crucial document today in the way regulators look at the area of prevention of money laundering and terrorism financing. So our compliance obligations depend substantially, meeting our compliance obligations depends substantially on me being in a position to understand the domestic risk that I am exposed to and my business is exposed to. So what gives us comfort is that this National Risk Assessment is based on empirical data. So what ended up being included in this National Risk Assessment is the findings of the various entities coordinated through the National Coordination Committee on the threats and vulnerabilities of the Maltese financial sector and the non-financial sector.
In fact, they made reference to lots of information that they collected from the FIAU and the MGA and the MFSA, police-to-police requests for information, STR information, REQ information, and mutual legal assistance information that they had available to them as well.
Requests for information from the FIAU as well. And there were the working groups. There was the ML threat working group, the vulnerabilities one, which involved different national working groups, so involving national authorities, like the FIU, MFSA, Attorney General, and then there were the sectoral working groups as well, which involved obviously representatives from all the sectors examined in the NRA.
In fact, the document actually includes a lot of statistical data as well, which obviously helps to enhance the results and explain the results even further. So I think that's something different that there was to the previous version of the NRA.
So there's a lot of expectation, right, for the National Risk Assessment to be published. One, because we're relying on the National Risk Assessment of 2018, and that National Risk Assessment was based on 2014 data. So ultimately, the findings as to what sectors should be given more attention, where the higher risk areas are, the pitfalls within the jurisdiction, etc., ultimately were 2014 results. So it was long overdue for us to actually have this National Risk Assessment. And her recommendation 1 and the 4th EU directive make it very clear that ultimately all your internal processes need to be risk sensitive. And you can't apply a risk-based approach unless you have a very good understanding of your domestic risk. So it's not just a question of understanding risk in general. It's not just a question of understanding risk at an EU level through the Supernational Risk Assessment. And we know that there's an October 17th, I believe, of 2022 version of the SNRA, and there are deep studies of what the risk at an EU level is, ultimately a domestic entity, a Malta-based entity, necessarily needs to have systems in place that are suitable depending on the domestic risk. So ultimately, back to the question that we asked earlier on, what do I do as an MLRO, as a compliance officer, as an organization when this thing lands on my lap? Ultimately, the simple answer is you need to read it, you need to understand it, but above all, you need to integrate it, embed it within your compliance program.
Putting myself in the shoes of an MLRO, I've just downloaded the NRA, I've read all 212 pages. Where do I start? What happens next?
So I think essentially the first thing that you would need to do is treat it as a trigger event. And the FIU have been very clear about this, that the publication of the NRA is actually to be seen as a trigger event, which means that then you would need to update and revisit your business risk assessment. That means, of course, looking at what are the main risks that are highlighted in the National Risk Assessment and how these are actually affecting your business and the risk profile as well of your business, of the type of customers that you are onboarding, etc. So it is actually the first step that you would need to take.
So you'd look at the new risks, you'd look at possibly changes in risk from the previous National Risk Assessment, so the way you treated a particular area in your previous business risk assessment needs to be updated. So there could be new insights, so the narrative of the National Risk Assessment might take you elsewhere in terms of what you are focusing on or what you should be focusing on as an entity that's subject to AML laws. So with the BRA, there's also the CRA as well that needs to be updated, I assume, right?
Yes, and it's important to note as well, it's not just only increasing the risks or mentioning more risks than that you would have already had in the BRA, because potentially it could be that the risks have actually decreased. So maybe you would have risk-rated certain types of customers or certain sectors as being higher risk, but in actual fact, now you've got a document which is saying that the risk is actually more moderate or at a medium level.
So you might need to reconsider your risk scoring on particular risk factors. Also, you'd need to look into training, whether you need to make staff aware of the risks which have been highlighted or typologies, because the document goes into quite a few typologies which have come out. So there's training on that, ongoing monitoring. So, for example, changing transaction monitoring rules if need be. Again, you'd need to assess the outcome of the NRA and see how it affects your business. It could have minor effect on your business, but it could have you might need to implement quite a few changes. So,
especially even in the area of the customer risk assessment, potentially there might need to be a revision of scores, the inclusion of new risk factors, potentially that you wouldn't have considered previously, and also a revision of your customer acceptance policy. If, for example, there were certain customers that you they were prohibited customers, now potentially you might want to revise that if the NRA is saying that they're not as high risk as you originally thought, and vice versa. Of course, there might be some customers that are now or certain sectors which you would want to treat as being higher risk and even mention in your customer acceptance policy.
I would say also, I think timing is an important aspect. The truth is that most subject persons amend the business risk assessment in time to resubmit it to the FIU with the risk evaluation questionnaire. So the chances are that at this point in time, so between the publication of this document and April, May, most subject persons would be working on the new business risk assessment. And I would say that it's unthinkable not to at least consider at a high level the findings of the NRA at this point in time with the new business risk assessment that's being developed within the company. So I wouldn't imagine that the expectation of the FIU would be that there would be a fully fledged revamp of the business risk assessment that, overhauls everything, but at least a mention of the main findings that are relevant to that subject person within the new BRA of the findings of the NRA obviously would be expected. That's my assumption, at least. From a training point of view, on the point you mentioned earlier, I would say that there would need to be an update to the training program. You mentioned correctly that there would need to be a fine-tuning of the red flag indicators that are mentioned in the training. But I would also say the type of training that needs to be delivered would need to be updated in terms of, okay, when do I inform the board about this situation? If my BRA changed and the BRA changed radically, then I need to retrain my staff on the basis of the changes in the risk landscape of the organization. So it's not just a question of let me train my team by telling them, listen, there's a new NRA and it says all of this stuff and, this is red, this is green, this is amber. I think there's more of a question of saying, yes, possibly as a result of this, my policies and procedures have had to be updated because there are areas of business that were previously low risk and now they're medium risk or medium to high risk, and therefore we need to treat them differently. So there's an impact, back to Alex's question, across the entire spectrum of activities within a company to meet the AML legal requirements.
So to recap, we're saying that subject persons have to look at their BRA, their CRA, the training program, transaction monitoring rules, the customer acceptance policy, and their policies and procedures. So
there's quite a lot that needs to be done. Yes.
I think something also that's really important for people to realize is that they can't just focus on the parts of the NRA that relates to their sector. So as we mentioned earlier on, there are different chapters, banks and financial institutions, insurers, investment firms, etc., right, with all the DNFBPs, professionals, etc. And the tendency is, let me pick my section, look at my section, see what the NRA tells me about my section. But the reality is, I think there are two other important aspects that one needs to consider. One is that I could be servicing clients that are also mentioned and covered in the NRA. So the risk of my clients might vary now from the way I assessed them previously. So if my clients are notaries, if my clients are gaming companies, if my clients are, estate agents, right? The narrative about the risk might be different today from the narrative we had way back in 2018. So let me just give one example on this. If you take the gaming companies, for example, I'm a bank, I'm a financial institution, a payment institution that services gaming companies. I need to not only understand what the rating of gaming companies is and to be able to differentiate between the different types of gaming companies, whether it's land-based or remote, or the gaming companies that provide different types of games, right? So I could have gaming companies that are casinos, betting shops, online betting, etc. So that is already one level, but the NRA tells us I need to go even deeper. So the NRA speaks about those entities that are operating from Malta through a recognition notice and not through licensing from the MGA as being a higher risk type of gaming company. So ultimately the NRA has identified something that was never identified before. So I'm bringing this up as an example. So there will be situations where potentially a category of clients of yours has been identified as being a higher risk area, and it's in your NRA, and you can't not take it into consideration.
So what you're saying is that we would even need to go deeper into what type of gaming client it is. So whether it is a remote gaming operator that has obtained the license through the MGA, or whether it is through the recognition notice framework. So even that's a question that you would even need to ask your customers and possibly reflect even in the customer risk assessment.
The second aspect, I think that one needs to keep in mind when analyzing which part of the NRA applies to me and beyond my specific sector, the chapter dealing with my sector is the fact that there are a number of areas that are generic and apply across the board. So there's a whole sector on immovable property, right? It looks at notaries, it looks at estate agents, but I could be, a lawyer involved in an immovable property transaction. I could be a bank that obviously has a lot of interest in the movable property in terms of loans, etc. But also those lawyers, those notaries, those estate agents could be my clients as well. There's the part on legal persons and legal arrangements. There's the part on citizenship by investment or residency by investment, what we commonly call IIPs, right? There's a whole section dealing with the risk posed by people who have obtained citizenship or residency by investment. So the risk that they pose to me if I am providing services to them. So I can't focus on my area alone. There's also the area of pooled accounts, clients' account held by professionals or other types of pooled accounts. So a holistic view becomes necessary, obviously depending on the type of subject person. Because if my clients are all natural persons, then it might not necessarily apply to me. However, an exercise needs to be carried out to identify those sections that are relevant to me as a subject person.
And to add to this point, since this NRA is more granular, it even helps us as subject persons to understand the category of customers that we are servicing and the risk that they pose. So let's take, for example, corporate service providers. So if you're onboarding, let's say you're a bank and you're onboarding corporate service providers, it's not just enough to say that, okay, the risk is medium high, and so we're going to rate them all as being medium high, but we need to also look at what the section says about that particular sector, because you will see when you read it that depending on the type of services that the CSP offers, the risk profile changes. So for example, if you are servicing a CSP that mainly provides directorship services, the risk profile is medium high at an inherent level. But then if majority of services being provided are registered office, for example, then in that case, the risk is much higher. And obviously there's an explanation which we'll be going into in another episode. But so what I'm saying is that it's important that we are even granular in the type of clients that we are servicing and the risks specifically for the type of services that they are offering.
So as we said in the introduction, we have to look at the NRA also within the context of the supranational risk assessment. We mentioned the supranational risk assessment as the assessment at an EU level of the money laundering, terrorism financing risks and proliferation finance risks as well, now added on within the EU internal market. So what we wish to do during these episodes, and we can start doing that today, is to try to superimpose the NRA onto the SNRA. And immediately we'll see that there are differences in the findings. Before, this used to be an easier exercise because both the SNRA and the Malta National Risk Assessment use the World Bank methodology. Malta has now adopted a different methodology, a homemade methodology, homegrown methodology, which is explained in the first part of the NRA. Going forward, it seems that even the EU will be adopting a different methodology going forward. But I think it's a useful exercise to compare the findings as to what the money laundering and terrorism financing risks are in Malta and compare them to what they are within the broader landscape of the EU. And also, I think you prepared a slide on this to compare our current NRA with the findings in the previous NRA. As we said earlier on, the risk seems to have, at least the residual risk seems to have decreased substantially in most areas.
In general, the SNRA has rated the different sectors as, I think, they're more on the high side, okay? So in general, there are only a few areas which were actually rated as being medium or at least low. There wasn't anything rated as low on the SNRA side. Looking at the slides, if we start with the DNFBPs, we will notice that in general, the risks at national level are much lower than the risks ratings at the EU level. Okay, so the supranational risk assessment in general has a higher risk rating across all the sectors. If we look and compare now the 2018 to the 2023 NRA results, always looking at the residual risk, we will see that most of the risk ratings across the different sectors actually decreased. Only one sector remained rated the same, which is the immovable property sector. and one sector increased in risk, which is the dealers in high-value goods. Tax advisors weren't rated in the 2018 National Risk Assessment, so we can actually make a comparison between them. If we move on to the financial sector, we will see mainly the same thing, where the risk at national level is considered to be significantly lower than what the Supernational Risk Assessment tells us. And credit institutions, as you can see, has actually decreased in risk since 2018. Financial institutions remained rated the same, and the investment services sector and long-term insurance sector actually decreased in risk, and pensions remained rated the same.
So we're looking at the residual risk right here. So we can safely say that currently, going by our most recent NRA, the risk of most sectors, both the NFBPs and financial sector, has reduced from what it was previously, so 2018 based on 2014 data, and is significantly inferior to the residual risk of the same sectors at an EU level. Presumably, this is attributable to the increase in supervision. Today we have a registry for beneficial owners, which we didn't have before. Presumably also there is, at least the assessment that was carried out through the working groups, etc., is that the level of understanding of the subject persons has increased, the defences, the preventative measures, etc., with the subject persons. So a lot of what has changed in terms of results is because of more effectiveness, right, in terms of preventative measures and supervision. I think that would be a fair conclusion. So ultimately, I think we could also conclude that we should be focusing more on the inherent risk than on the residual risk, right?
Because obviously, what the regulators and the authorities are doing to obviously decrease the risk from a national level, that's important. But when you're, looking internally at your own risk as a business, that's not really the most important part of the assessment, what the regulator is doing, but you're more focused on what the subject person is doing and what the risks inherently of the subject persons and type of customers that you're onboarding are exposed to. We can also look at the gaming and the crypto asset service providers on the next slide. And again, you'll see the similar patterns where the risk profile decreased for remote gaming, but it actually increased for the land-based sector. So it increased from low to medium. And with the crypto asset service providers, we didn't have a rating in 2018, but this year they've been rated as being at a medium level. But again, if you had to compare it to the EU Supernational Risk Assessment, both remote gaming and crypto asset service providers are rated as high risk, which is obviously significantly higher than what the NRA is telling us.
I would say an interesting difference between the NRA and the SNRA is the level of granularity when it comes to the narrative. So in terms of rating, statistics, etc., I think we have a lot of information. However, when one tries to understand, I'm taking this example from the last slide, right? The gaming sector. If you look at the SNRA, there's a lot of detail as to which segments of the gaming sector are higher risk. They look at bingo halls, they look at lotteries, etc. Yeah. So it's pretty detailed. When we look at our national risk assessment, unfortunately, we get tables, but very little explanation. So then when it comes to actually bringing that information into my internal procedures and into my business risk assessment particularly, it becomes a bit of a struggle, I would say, yes.
So to add on to this, they do go into provide a rating for the different types of sectors, for example, gaming parlors, etc. But the narrative is a little bit, let's say, lacking in terms of how they've actually reached those conclusions. What are the risk ratings or the particular risks that led to the differences in the risk rating depending on the type of sector that you are operating in. So if it's a land-based casino versus a gaming parlor versus a bingo hall, etc.
And for a meaningful integration of the results of the NRA, clearly you would need, some more granularity. So what is in the working papers of the NRA becomes even more important. So the authorities have mentioned the possibility of sharing the conclusions of those working papers within certain private-public partnerships, so within certain restricted areas. And this is something I think we should really encourage, because otherwise we're just going to be simply attributing a score without knowing which specific areas of business deserve that score and which deserve a different score. I think a good example is investment services, right? They just use the term investment services, and within it you've got fund administrators, fund managers, collective investment schemes, portfolio managers, etc., all under the term investment service, when clearly the risk of a collective investment scheme should be much lower than that of a discretionary portfolio manager or wealth manager. This is an area where we definitely need more information to be able to integrate, these findings into our BRA and have and achieve the results that we're expected to achieve.
And I think, in fact, it's very important because, as you're saying, the FIOs have also said in the NRA session that they expect subject persons to look at the inherent risk. So we need to understand that inherent risk. We don't have a good narrative to go on, and just a rating, it's not very helpful. So I think we need the working papers would be extremely beneficial, to have certain sessions on that.
One other very good example is the IIPs, right? What they call the RBIs/CBIs, right? Citizenship by investment, residence by investment, to use the terminology that the FATF uses. That's why they've used different terminology. But the inherent risk over there is what is important, because if you look at the residual risk, it's a medium risk, and it tends to be in contradiction with what the EU directive tells us, that you need to apply enhanced due diligence because there's a higher risk in these type of investment schemes. Ultimately, clearly, we need to look at the inherent risk rather than the residual risk. What I think lesson we can possibly learn from this is that there are different residence schemes, and not all should be rated the same. So definitely the assessment of Malta's latest NRA is that the systems in place within the authorities and the due diligence that is carried out is good enough or effective enough to reduce the inherent risk to a medium risk at a residual level. So if you compare the Malta scheme possibly to other schemes in other jurisdictions, the residual risk is different. However, one can't ignore the fact that we need to look at these type of schemes as inherently risky. So, let's hope that when people read the NRA, they don't reach funny conclusions and not misled to believe that they can lower the guard when they look at certain schemes that are inherently higher risk by the very nature.
Again, so if we take a recap on the comparisons between the 2018 and the 2023 NRA, one of the trends we've highlighted is the general reduction in residual risk. Does this also give subject persons the opportunity to revisit their risk appetites? Does it provide an opportunity for them to consider areas that may have been out of scope or prohibited, and they'll think about if there is a suitable level of risk for them to explore business opportunities?
I think it's a crucial point, because we're focused so far on the procedures and your processes and all of that. But ultimately, yes, I think there needs to be a re-examination of risk appetite. So going by what we said earlier on, it doesn't mean that risk areas that are now residually low should somehow suddenly start to be entertained like there's no tomorrow. But one would be expected to revise the risk appetite statement, the customer acceptance policy, and things that maybe internally were totally prohibited. One starts to reconsider, because ultimately now the measures in place are good enough to meet those requirements, the legal requirements, and to lower the level of risk.
So a question that a lot of subject persons have asked is, what do we do if we disagree with the risk rating that is identified in the National Risk Assessment?
Ultimately, you can and are likely to disagree with some of the findings because you would have evidence internally looking at your own client base that is suggesting something else. So in that situation, what I think should be done is that you document on the basis of the evidence that you have your the variation of what you are seeing with what the NRA is saying. So if the NRA is saying that there is a certain segment that is clearly high risk, but your client base is evidently low risk, notwithstanding it falls within that category because of other reasons, because of the geographical area, because of the limits that you have imposed on the activity that can be carried out by that category of clients, etc. Then you are justified in saying in your business risk assessment, the NRA classifies this segment of business or this segment of customers as being medium to high risk. But because of the limitations that we have, and because of the type of customers that we have onboarded and the systems that we have in place, we feel comfortable enough to treat them as low. But what's important is that it's evidence, and it's evidence not just with opinions, but with actual facts.